Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday the 13th, February the 13th, 2026. Let's get started. We'll start off by week here. You can see emerging markets up at the top of the list. There's Canada. I've made a couple changes here, just I think it's important. And down at the bottom of the list here, Bitcoin, again, still continuing to draw down. Silver on the bottom as well. Just a reminder, please pause your video player at any time for more details. Now, we got lots to get into. I think this is very important. So this is the value versus growth stocks over the years. This is a 10-year plus chart, and these are 34-week exponential moving average crossovers. You can see we have just crossed over here in the bottom right for the very first time bullish in 4 years. Okay, so what that means is value stocks are outperforming growth stocks on a more kind of longer term basis, although again we can still see that this is a downtrend. But the point is there's a lot of implications here. Commodities are certainly one of those ideas. So when you look on the left side, this is the commodity, it's the DJP, it's the ETN versus US stocks. We have also crossed 34-week positive for the first time since actually 2021. And on the right side, I'm showing it versus Canada. Now, it hasn't quite crossed over there yet, but the point I'm trying to make here is that commodities here are starting to outperform, and value stocks are starting to outperform. And value relates to emerging markets. It relates to, again, lots of these cyclical type stocks, materials, energy, and all so forth. And I think it's very, very important that we continue to pay attention. The Mag 7, of course, gets so much attention, right? All the big stocks, the Microsofts, Googles, Amazons. So on the Mag 7 here, just looking at that ETF, this is Mags in the US. We can see we now have lower highs, we have lower lows. We can see on a relative basis to the S&P 500 in the bottom panel, in the last year, these stocks are dead flat against the S&P 500 itself. Now, wow, there's been a lot of volatility this year already. It's only mid-February, and you can see here, this is a list of 28 stocks that are down more than 30% this year. That's a whole lot. And again, we got to be very careful here. So remember, when markets rotate, especially when they rotate, quite significantly from one major area to another major area, what happens is money is literally just flowing out of a whole chunk of the market, and it's flowing into another whole chunk of the market. It can cause certainly a lot of disruption, and the flows are very, very impactful. Can certainly cause a lot of kind of fear and greed from investors as they sort of understand that, whoa, these holdings that we really liked have really changed course. I think this is very important here. This is a Pring Capital Goods. If you just look at what I'm plotting here, it's industrials and mining, aerospace, construction, all the real economically sensitive industrial type exposure versus discretionary. And we've got a multi-year breakout underway, and I think this is very, very important. I also think this is very important. I've taken this chart from Martin Pring, who's a technical colleague of mine, and you can see this is a major breakout he's showing for commodities versus bonds. Now, from a pure price perspective, what this means is this is inflation building, and so in the event that this breakout holds, Martin made the point here that this is a major commodity, major inflationary signal. So again, we've got certainly the central bankers telling us they're trying to keep inflation low. Some of them are, of course, making interest rate adjustments to go and continue to sort of show and evidence that is happening. At the same time, I want to just continue to point caution here, because the truth is that the commodity prices themselves are rising, and rising input prices generally mean higher prices for goods, because it all flows through, and that means inflation. The bank stocks, Canada is certainly one of these areas that benefits from value, and it has been quite strong versus the US over the course of the last year and a half, which has started to shift some significant numbers. I want to look at banking, because in the financial sector of the Toronto stock market, we're sitting about, I think it's 32% or so. So on the left side, I'm showing the two largest banks, that's Royal Bank and TD Bank. Now, just for the sake of comparison, I'm showing them all in US dollars. The two largest banks in the US, Bank of America and JP Morgan. You can see these are weekly charts that I'm showing, and you can see, the charts in the top panel. In the bottom panel, I plotted them all versus Canada itself. So on the right side, you can see the US banks have actually been underperforming Canada. And again, the strength really, these Canadian banks have been much, much stronger as investments in the financial industry. And so again, I think we all need to pay attention to this. I also want to point out that gold has been very strong, right? It's been stronger than stocks on a 1, 2, 3, 4, 5, 10-year time frame. And again, there's been lots of volatility in the course of the last month. Of course, gold sold off from the peak there, but again, let's be honest, the market remains in an uptrend for gold prices. And so from this perspective, these are uptrends. On the left side, we've got gold bullion versus Canadian dividend stocks, and on the right side, gold bullion versus dividend stocks, and these look like pullbacks in uptrends to me. Let's also look at gold versus Bitcoin. Again, lots of attention, of course, coming here as Bitcoin has come off. And again, I showed that monthly chart last month. I'm not going to show it again, but the point is that this is gold versus Bitcoin. It made lows for the move there back in 2000, and I think it was early 25 actually, if I'm not mistaken. And bottom line is, you can see from this perspective, over the course of the last many years, still got work to do here in terms of gold coming back versus Bitcoin on this multi-year time frame. Now, again, I want to point out gold stocks again. So just having said that gold is, certainly in an uptrend, I completely agree with that. It's very strong. At the same time, again, volatility has come in to these gold and precious metal equities. I've showed this several weeks ago here, or a couple weeks ago, and that was that biggest bar against, which is where we actually sold our gold stocks for clients. And so again, yesterday's price action on the daily chart here, that to me looks like a lower high. So the reason I go and plot another trend line on there is because that's a significant enough bar that looks like this little short-term counter trend bounce has now ended. So from this perspective, as we continue to evaluate opportunities, whether it's in commodities and emerging markets and industrials and mining and all these kinds of areas, which is, again, looks very, very promising for the big picture, we still have to be aware that volatility comes in. We've had volatility again perk up here recently, and volatility index is rising on the short-term basis, which means stocks are coming in here, a little bit of pressure, and we certainly had some volatility this week. And so from this perspective, we want to continue to monitor key areas and be very, very careful, certainly not getting caught chasing strength, and at the same time not getting too fearful of pronounced weakness, which I would describe as having several days when a strong area comes against, right, goes down for several days in a row. There's a tendency to, of course, have fear, but at the same time, we have to be aware that again, risk and return is all about sort of managing that fear in the context of the price action we can see before us. Now, I do want to show you, we of course use absolute and relative strength. This is an ETF that we've owned here for some time. So that's the WXM in Toronto. It's a momentum index in Canada. So you can see yesterday there, that's a lot of force. So this is the force index. It's Alexander Elders force index. What it basically means is there's a lot of volume that came behind this. Now, again, it's almost the biggest bar against. I could have perhaps labeled it that. It's not exactly big enough for me to have done that. At the same time, I certainly like to sit up and watch this, because the truth is that, again, the markets have come up a whole bunch. In fact, the US markets at this point are down on the year. But the truth is that we want to continue to watch our holdings, because we don't know where volume is going to come from. And when volume comes in and wants to sell at lower prices, we have to be aware that prices could start a correction. On the sector watch here, we're going to finish off. There's gold stocks up at the top of your list. That is despite the sell-off yesterday, and they were down quite a bit. So there's a lot of volatility in that space. You can see most of the sectors here are all trending upwards on a short, intermediate, and long-term basis. Special mention, actually, again, lots of strength in the Toronto market, as I've talked about. The Canadian technology stocks, which is not a very, broad sector. There's not that many companies in there. Look at this. They're down 24% this year. That is a very strong downtrend in many fronts. We're doing an upcoming seminar next month. There will be much more details announced. It's called Living is Giving. If you are interested, just scan the QR code. There'll be more details. But again, if you're interested, let us know. Please, lastly, follow me on X. I'm at David Cox RJ, and I appreciate your time this week. This has been David Cox, Portfolio Manager at Financially in Sync, Waterloo,